Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 183 of the AJ Brown Show. Today is May 9th, 2025. AJ, we got a lot going on in the news. How are you feeling today?
Hey, I'm feeling great. We got a little cool down here on the East Coast, so that's good. Both a cool down in temperature, but also maybe a cool down in some of the rhetoric coming out of the town that I live in the burbs of. So that's cool.
Yeah, and we're starting to get a little bit of trade negotiation, right? Tariff has been the big headline over the past couple of weeks, and it seems as if yesterday we might have made some headway on finally starting to strike deals. What are your thoughts on that? Did it have an impact on the market? Is it helping overall sentiment?
Well, let's go. The market is exactly that. It's all about sentiment, it's all about what people think is coming around the horizon. We could talk about whether or not there is a UK deal because there was some excitement around the first of a trade deal with the UK. I mean, I haven't seen anything in writing. I kind of just saw some hype. And in addition, the UK, do we actually do much trading with them? Maybe a couple of Bentleys and here and there, maybe some Jags, but otherwise, is it that big a deal? But that doesn't matter what's actual tangible. It's what people think. And then, there's hype around this China. But here's the scoop. This current administration who has taken a huge role in fiscal, going with executive orders, kind of bypassing the legislative branch, they're really into hype. So, whatever drives the market, but, the market's been going sideways all week. So maybe investors are a little bit smarter than that. I don't know.
Yeah, so there was a big press conference yesterday. It sounded like they're getting close to the paperwork, and then the rhetoric heading into the weekend that I keep hearing is that we're gonna start to negotiate with China, which might invite a more welcome sentiment. And the markets are kind of last Friday we had a positive Friday. This Friday we're looking positive again. But is that a sentiment that we should care about? Because when we do these things heading into the weekend, man, when the markets open up on Sunday and they strike a deal, I mean, we could be up like 7% in the pre-market.
Yeah, pre-market and then amateur hour. I'm already seeing investors starting to pull back a little bit today. Anything can happen. But I like to look, I'm an end of day trader, SIP. So I don't really pay attention to what's going on during the day until I get there in the evening and I see what has happened and I make decisions for the next trading day. And, this whole week, like I said, we've kind of hit up against this level of resistance at 5,700 on the S&P. Um, there's got to be something very significant. A lot of what has been happening, fizzles out when it actually gets to the date. So, unless we see something significant, I'm expecting that the high close that we saw, let me pull up my on May 2nd, might be our top reversal. And then we might be heading down to see where the next bottom is and sticking to the rules, sticking to my retracement analysis. It's where we top out. Actually, where we top out right now is not going to be as important as where we bottom out in the next few weeks or few days. I don't know how fast the bear jumps out the window, but that's what I'm watching. I'm watching for tops and bottoms and kind of getting an idea of whether this current move has legs or whether we're going to do some sideways choppy. Right now, I can't qualify the market as anything more than being kind of on a sideways choppy pattern, which actually for us premium sellers, and we've got a guest today who's in the same boat as I am, talking about premium selling in all different ways. For premium sellers, this is actually pretty nice, right?
You're right, and we'll dig into that a little bit more. And I guess we always like to reference your VIX trade. It
Mhm.
seems to be pulling back, which may be leading to this short-term rally. And when we reference your rainbow chart being in that green area, that really large green area, thoughts on this?
Well, so first of all, I pulled up my VIX trade because I've got that founded, unfounded fear threshold that I've drawn in at 26 bucks. It's kind of like I was telling my group yesterday, it's kind of like when folks are out there selling insurance, right? And that's kind of what premium selling is. It's the insurance business, and it's one of the most profitable businesses out there because if you think about it, people buy insurance for peace of mind, or maybe they're told they have to buy insurance in order to, own a house or own a car, but it's usually a minimum amount and people always buy more because it gives them peace of mind. But how often do you actually cash in on your insurance policy? That's the whole thing, is that insurance companies sell you insurance, and then, the number of people who cash in, usually it kind of works with, first of all, peace of mind, the fact that we want to feel secure when we go to bed at night. But a lot of times our fears, are unfounded. But then you think about when fears start to be founded. And I'm thinking about my wife and I have been looking at property in Monterey Bay, right, which is Northern California. And Monterey Bay over the last decade has really been plagued by a couple of forest fires, which is not only scaring my wife, but some of the property has become great deals. And when we dig a little bit deeper, the reason is because that fear is not unfounded, and insurance companies have been like, hey, this is not a good business for us, and you can't buy homeowners insurance anymore in the areas where all these good deals. It makes sense why there's good deals. So when I look at the VIX, right, I look at this $26 level, and when I get above that, I start to look around for, is what people are afraid of founded? And a lot of times it is. When it gets below $26, a lot of times we can go back to that business model where you sell insurance and 85% of the time the person isn't going to exercise their contract. So bringing it back from my analogy to like real life, I mean, the VIX is high, but it's below my unfounded, founded fear threshold, which tells me, hey, I could be selling some good premium, getting, top dollar for this premium right now. And with the markets mostly kind of in the beginnings of a sideways choppy pattern, I can leg into some of these positions, or I could just do the positions outright and really be doing well, being in the business of selling these derivatives to folks who want peace of mind in their long and short holdings. So that's really where my mind is, Sip. That was a lot of word salad, but what I'm trying to say is the planets have aligned for premium sellers right now. So that's really what we want to be doing.
Yeah, so rather than trying to find a top or a bottom or a position, looking at the equities, you have these other opportunities, these other strategies, and like you mentioned, in these choppy markets, premium selling, 3 week strategies are great for that. I did want to. I don't know if you want to dig into this a little bit more, but the other big headline this week was the FOMC, and
Hmm.
that's why I brought up the tariffs, because it really didn't. It felt like nobody really even cared what they had to say, because it would just be overridden by whatever's happening in the tariff front. Am I wrong in that assumption?
Yeah, and I just, it's really cool. It's both cool and uncool where I live, but the talk around here, and even if you just go down to some of the like clubs on Capitol Hill, or the pubs, not clubs, you don't see, you'll see some of these legislators hanging out, right? Like that's where they go after they've had a hard day of lawmaking, right? And I think that there might be, Rand Paul is a big person with Susan Mikowski, and I can't think of the person from Maine right now. But these three are senators that are not really liking this whole thing. If you remember when Trump first took office, he kind of decreed that there's an emergency out there because in the past, you haven't been able to change tariffs like this, like on a whim. And the reason why he's got this power to do that is because he established that there's an emergency. And it would take the legislative branch, meaning Congress, to basically say, "Hey, the emergency's over," right? And as the party, and I'm not even going to call it the GOP party because I think the GOP party, maybe the conservatives disagree with some of this because usually conservatives have been on the side of free trade and business, right? The current party in power has control over everything, but there's a couple of dissents going on, and I'm hearing that just in the rumblings where I live. So I wouldn't be surprised if some of this, trade deals don't work out. And I noticed that he's kind of pulling back on tariffs a little bit to kind of keep those dissenters at bay. But there's been discussions that maybe some folks will flip sides and say, "Hey, it's time to end this tariff nonsense and go back to some, strategic negotiations rather than tariffs one day, tariffs the other day. Tariffs on Hollywood? Nah, not really. The next day, tariffs, no tariffs on Hollywood, which is just driving investors and the market's crazy. People are starting to complain about their 401ks being down. So the scoop is I'm seeing some kind of insanity. And you're right. The Fed's trying to the main thing I took out of the Fed press conference was we can't really figure out left or right now because things are changing on a daily basis. But in the macro terms, we're not going to do anything probably till July.
Yeah, and the craziest part is it's not even like an official statement on tariffs. It's just like Trump on his couch pulls out his phone. He's like, you know what? I think we need to start increasing some tariffs on these Hollywood films, right? And then everyone's like, how do you
You
even do
know,
that? Like
They're
everyone's
literally, and
confused.
I'm not a free trade proponent. I'm actually a fair trade proponent, but there's doing tariffs and there's really thinking it through and being strategic and being sure what your goals are and applying them and sticking to them and putting rhetoric around them in a certain way. And then there's what's happening right now. I think that there was an awesome opportunity that was missed, but again, I don't want to get into politics. I do want to point out, I just pulled up, how we've been watching this quantitative tightening, which is one of the tools that the Fed uses that they don't usually, it's still compared to interest rate hikes and just Fed rhetoric. It's still probably one of the more newer tools that they've been using since about 2008 to get through the Great Recession. And then they used it again big time to get through the COVID pandemic scare. But they've been tightening, meaning they've been selling their bonds on the bond market rather than doing what they did a decade ago, which was letting them expire after, 10 years, less than a decade ago. But I just noticed that after a 3-week pause, about a week and a half ago, they started to do some more quantitative tightening. So that's an interesting data point for me to watch them think that it's okay to start selling their bonds again. We've been talking about that they want to get that number down to less than 5 trillion before. Again, I think that their strategy at that point would be then to let them just expire. But they had put a pause on that and now they're doing it again. So that's telling me something as well. I don't know quite. I need more data to see if I can understand what they're doing, but they started selling again, Sip.
Yeah, and I guess we'll continue to tune in to the rest of the reports coming in this week and see if they're more important than what's being tweeted and try
No.
and decipher one or the other.
No,
And
they're
that
absolutely not. The scoop is what's moving the markets is, of course, what's being, you gotta everybody has to have a Truth Social and in my humble opinion, everybody has to have an X and a Truth Social account right now to be able to navigate what's going on.
Yeah, and we'll see if there's some more enlightening ideas with our special guests here.
Yeah.
We've been rambling, and I know we've got somebody here that's a little bit more knowledgeable on the stuff than me. So we'll go ahead and bring him in and add a little bit of commentary to all the hectic things that are going on in the market. But before we do, just want to give everyone a quick reminder. AJ's Quick Links page has been added to the chat. This has got all of AJ's goodies on here, links to the social pages. You'll see some of the indicators that are highlighted on his charts. You can go ahead and get free access there. Go ahead and show some love. If you're watching on YouTube, hit that like, hit that subscribe button, and some other freebies, some more information about Trading Trainer, one-on-one coaching, and the general program in itself. So the link to that is in the chat. We're going to take a break here and bring our special guest on and talk about interesting ways to use options to take advantage of this chop market, this uncertainty, this increase in premiums. So sit tight, folks. We'll be back in a jiffy to dig into some more. And before we go, we are streaming live. So throughout the rest of the show, if you have any questions about any of the stuff we're talking about or any of the names that we might cover, feel free to throw it in the chat. Otherwise, sit tight. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ. As I was watching the news yesterday throughout the day, I did catch the UK press conference, but literally 5 to 10 minutes afterwards, they cut away to the white smoke coming out of the Vatican, and it seemed like the rest of the day was just coverage of the new Roman Catholic Pope, who happens to be from my neighborhood, Chicago, and the neighborhood of where our special guest is. So I feel like that's a good transition to go ahead and bring our special guest for the show on, Mr. Dan Passarelli. Dan, welcome back.
Hey guys, it's great to be back. Thanks for having me.
Absolutely.
Yeah, how did you feel hearing the because when I went to Twitter yesterday, I just kept hearing the Pope is from Chicago. What were your thoughts when you first saw that?
Well, I thought it was interesting. As soon as taking office, he added the 11th commandment: "Thou shalt not put ketchup on a hot dog."
Hey,
That's good.
and there were a ton of memes, AJ. I'll send them your way. But the fact that there's an American Pope does have some sort of
I
connotation
mean, that surprised me.
that is definitely historical, and maybe it'll bring the world to peace a little bit. All right, Dan. So, what are your thoughts on? Let's just cover the general market. From what AJ and I were chit chatting about, what are you seeing from, the things that you're discussing with your members and some of your mentoring stuff? What are your overall thoughts on the market and how investors should be navigating?
Yeah, I will tell you what, I have been in option trading for over 30 years. And I would say, honestly, this is the best market for option trading probably that I've ever seen. We have we've got this volatility in the market where we're getting, the ups and downs and, the typical oscillations, but the opportunities for selling option premium, it is just, it's incredible. It's incredible. Just going in, selling puts when the market's down, selling calls when the market's up, taking advantage of this rich premium. It is literally just incredible.
And are you because when we had you on last time, it was the big earnings plays. I remember the volatility rush and crush. Now, is that still something that's in your wheelhouse?
It is, yeah. I mean, the earnings trading, it's pretty cyclical, right? Companies, I mean, there are earnings announcements every week of the year for sure, but they're really concentrated into what we call earnings season, right? That's your January, your April, your July, and your October. So sitting here in May, I mean, it's a little slower for that. So I shift gears and I start looking for other opportunities, credit spreads if I'm actively trading, my investing, which is my covered calls and cash cured puts, what we call the wheel strategy. I'm really focusing a lot more on those right now, just because earnings kind of slowed down a bit.
And then do you have any thoughts on the actual A/B scenarios from these earnings calls? Because I'm seeing that more than I've seen in the past, where it's like, well, if this happens, then we expect this, and if that happens, right? And a lot of it is based on the tariff rhetoric.
Yeah, I mean, that's the thing. Markets love certainty, and we have just been getting a ton of uncertainty. Definitely uncertainty on the tariffs, right? I mean, even the market has been waiting for, a big announcement, like, let's tie a bow around at least one of these countries' deals. And yesterday, oh, hey, we've got a deal. And, the market's like, great, let's hear about it. And you read about it and it's like, I'm really not sure what this deal is.
I know, right?
So, I mean, the market, I think, was so dying to rally when they got their first deal announcement, and it tried, and it kind of did a little tiny bit, but, it just didn't happen. And, even the Fed announcement, I mean, obviously they expected no hike in interest or cut in interest rates, which is what we got. But, with the announcements, it's always about what Powell says afterwards. And that was Powell's thing, too. He's like, I don't know.
I don't know.
Yeah. It's like, I mean, we got to see what goes on with these tariffs. And geez Louise, we're still not getting any information, which, I mean, from a citizen of this country, I mean, geez, I would love to get some information. But
now change your hat to your options selling person, and you're actually, yes, right?
I love it. Yeah, I love this uncertainty.
Because when you're selling options, you're giving people that peace of mind, right? You're giving them the ability to hedge their investments. And so that's what I keep telling everybody. You want to now get into the business to sell these options because people are buying them left and right. Yesterday, when that UK deal kind of turned into mush, I saw people starting to, bid up the price of options. And I'm like, I'm in the right business.
Yeah. I mean, the VIX, I mean, geez Louise, how long has the VIX been over 20? I mean, it's been a long darn time. And then we get this, clarity announcement that was as clear as mud. And we're still sitting here at 2240 right now in the VIX. And so, okay, hey, I'll take that. Yeah, just give me some bids. I want to hit them.
And so tell us, I'm curious, you mentioned trading the circle. Tell us more. Give some of our viewers kind of an idea of what you mean when you say that.
Yeah. So here's the thing. Now, this is, by the way, and I want to clarify this. For me, this is an investing strategy.
Yep.
Yeah. So not a trading strategy, an investing strategy. So tell us, divide that up for folks, because I'm constantly working with folks and trying to get them to put their, be able to differentiate between being a kind of a person who sits there in the markets trading versus being somebody who's thinking about portfolio management, investing, and, for the long term. Can you help us with that thought? Yeah. So, I mean, I guess the best way to think about it is, as an investor, okay, so you work throughout your life, you save money. But if you just leave money in a bank account, I mean, you're basically losing because of inflation. At least at Chase, where I bank,
It's true.
you get like 0.25% interest, and you lose 2.5% on inflation. So you have to take that money and you have to invest it into things, right? And so, like, that's investing. You have this cash, it's got to go somewhere to grow over time. Trading is more of a business to me. Trading is looking at price action and making educated guesses with strict risk controls to put on a trade to extract money out of the market as a business over and over again consistently. And the traders that I know, they also invest. Maybe not necessarily all investors trade, but I would say all traders invest. So, I mean, as far as the investing goes, if I'm looking for a stock to buy, whether it's from a value situation or a price action situation, either way, I want to buy them cheaper, right? So what I'll do is I'll sell puts at a lower strike. And I actually hope I get assigned. I look at the put as kind of like a quasi limit order. And if I don't get assigned, if the stock doesn't go down below the strike price, the owner exercised the put, so I then have to buy the stock from that person. If that doesn't happen, that's okay too. I get to keep the premium. And then once I own a stock, as it goes up, I mean, at some point they become more expensive, too expensive. Mm-hmm. And stocks tend to go up slower than down. Mm-hmm. So I sell calls to bring in extra premium, and I hope I get assigned on those too most of the time. If I do and I sell the stock that I bought at a low at a high, great. And if I don't, which is more common, I usually don't get assigned, then I just get to keep that premium and do it again. And so, like, I'm basically buying low, selling high, which I'm supposed to do as an investor, but I'm also taking in this option premium. And right now is like, it's just literally the best market I've ever seen in my entire life to be doing that.
Yeah. So with the cash secured put, instead of just going out and buying that stock that you're interested in, that you've got, you've done a little bit of research, you're like, I'd be okay having this in my portfolio for the long term. What I hear you doing is you're like, okay, I like this stock, but instead of putting in a limit buy order down at some value, you pick a strike price on a put. Maybe, is it a near term? Is it what time frame are we talking about with expiration?
Yeah, I have a few different techniques.
Okay.
Yeah, this is actually the topic of my upcoming book. But nice. Yeah, I say upcoming, it's still like a year off, but
that's what book writing is difficult to do when you've got day-to-day going.
Oh God, tell me about it, man. But I've been dripping some of what I'm talking about in the book out on my podcast. But as far as the term structure for what options I like to sell for puts, I've got some, like, I was selling puts on SPY for a while until I got assigned on them. And now I'm selling calls on them. But what I was selling those about a week to 2 weeks out, so that I could get in a decent enough premium, far enough away from the money where it's got to dip a little bit before I get filled. And that's really my more common scenario, especially if there's weeklies. Mm-hmm. But I've also got a trade on in Intel, as a matter of fact, where, well, that one I actually own the stock and I'm short a call from, oh gosh, where is it again here? Wait. Yeah, I'm short a December call on it. And in addition to that, just to bring in even more income on it, I'm also short the September 15 puts on that one. So that one, I kind of take a little bit of a longer view on.
Okay.
And
So it's on a per symbol basis, it sounds like, but usually you're selling near term, like 2 weeks out. But in some cases, there's some longer plays you're doing.
yeah, man, there's a lot of nuance on this. Like,
I mean, if you're writing a book about it, yeah.
I know. Like, that's the thing. Like, I put out like little daily videos that are like 3 minutes long. And man, I wish I could just sum all this up in a 3-minute video. Then I wouldn't have to write a darn book.
Right. I mean, if it really was that easy, wouldn't we all be rich and nobody be working? We'd all be just investing, but that's not the case, right? So there's a lot of nuances in doing this investing and trading, I think.
Yeah, there is, man. Because like a lot of people think about, and this is more for the folks in your community here who, who have done a lot of the training and such, and know about selling. Like, you think, okay, if I sell shorter term options, I get higher theta, so I make more on them.
Yeah,
and that can be right, but it depends on the proximity of the strike price.
true.
And if you're setting the proximity of the strike price for where I want to buy it, like, it might necessarily have to be further out in or further away from where the stock is, more out of the money of a put. And the further we go out of the money on puts, that relationship of higher theta, it kind of changes.
Yeah, it's no longer that curve that everybody sees when you Google option theta decay or option time decay. It turns to flat, right?
Yep. It turns to flat. And there's a lot of times where it's like, oh, geez, if I sell the longer term puts, I actually make more than selling several shorter term puts. Huh, interesting. And
so I got to tell everybody kind of the story of how I met you. Folks out there, Dan, when I started to visit the CBOE, whether I was a presenter in the 2008 time frame or earlier, I was just going because I wanted to watch people do their stuff. Dan was there first as a trader and then as an educator. And this guy knows all the nuances of options, and I started to hang around Dan behind the scenes, asking questions everyone. I don't know if he remembers me, but I was like a little twerp running around. So, when it comes to understanding those, I think mathematicians say there's like 27 different ways to trade options, right? Whether you combine different options together or you pick different strike prices or different expiration dates. This guy understands just through experience and also intuition, what those P&L curves look like when you change any of those variables. What happens to that theta decay curve? What happens to that relationship to, extrinsic and intrinsic value to the strike price? This is the guy that you want to be thinking about because he knows this stuff and he's able to, more than just knowing it in his head. Because a lot of people I've met know it in their head, but can they tell you, can they break it down into bite-sized pieces? Well, Dan has done that for me over the years. So, Dan is one of those guys who can then turn it into words that make sense to the rest of us, right? I don't mean to blow air up your butt, buddy, but I've always been very impressed by being around your orbit. So I just want people to understand, where I met you and our relationship.
Hey, thanks, man. I appreciate that. It's been, you do something for 30 years, you're bound to learn something at some point,
Right. Right.
And so Dan, that strategy you're describing is called trading the wheel. Is that kind of the term for it?
Yeah, that's what a lot of people call it, trading the wheel. And, just because that's in the nomenclature, I'll refer to it that way. I actually call it the cycle recycle trade. And I call it that because the only way it really works, like, if you want to deeply understand it, the only way it really works is to do it in a serial nature. Like, people will dabble in covered calls or cash cured puts and, okay, I'm going to sell this put. Oh, crap, I got to sign. Oh, I'm down money. Oh, I shouldn't have done that. Oh, this is the end of the world. But it's one trade. It's one cog in the wheel. But if you do it over and over again, I mean, just statistically, you're going to skate on, on most of them, and you're going to keep that premium on most of them. And the ones you do get assigned, okay, so maybe you're down money right now, but you probably collected enough premium before that to more than make up for that. And B, you're only selling this if you actually want to buy the stock. And like, how many times have you ever bought a stock in your IRA and at some point in time, it was down below where you bought it? Like, do you lament and say, "Oh, this is the end of the world. The stock that I bought, it's down $2. What am I going to do?" No, like, it's an investment. It doesn't.
That's the difference between being a trader who's focused on individual trades and just investing your portfolio for the long term.
I know, man. Yeah. It's such a mindset is such a big part of trading, isn't it?
Yeah.
Yeah, and we actually had a psychologist on as a guest that kind of helped describe it, and he's spot on. You know, the emotion is you got the fear and you got the greed, and they both pull at your heartstrings, and you gotta,
And you got FOMO too.
Oh, I know, man. Yeah, there is a ton of just behavioral psychology involved.
Oh, I know. People are always like, what sort of maths are you doing to tame the market? I'm like, man, if you actually have a psychology degree and you've been like hanging out with patients or groups, you probably have more experience with how to do the markets than somebody who has an engineering or math degree.
Yeah, no joke, man.
It's like
Well,
tribe think.
We'll see if we could wrap our minds around some opportunities and some breakdowns for the rest of the show, because we've got a pick of the week. I don't know if this is Dan's or yours, AJ.
This is mine.
This is one that is kind of new to the show, and then we've got our speed round from some of our names around the country. So Dan will run through these. AJ will kind of give his breakdown. You can provide your insights on the plays, and let's see if any of this trading of the wheel concept strategies we can implement. So this is the fun part of the show of taking all this wonderful knowledge and putting it to use. All right, AJ, let's get the party started with your pick of the week. This is Silver Miners ETF Amplify Junior, ticker symbol SILJ. A lot of extra words there in its title. That's kind of new to me.
Well, first I want to give a shout out to Luis. He's one of our program participants. He's one of our best program participants. He's been with us for a few years, and he shows up religiously to our Thursday workshops where, we have all of our folks give us candidates, and then we go through them very quickly, letting people learn as we do what we're looking for different candidates, and then we pick one and we plan out a trade on it. And this was one of Luis's a few weeks ago. And I've been watching it ever since Luis threw it our way. I love the price point. This makes it so that folks can get involved with it. And my thought here, as we're testing this top here around $12.75, my thought is that I want to short this symbol. Now, I didn't find, a lot of times I like to leg into these things. So I'm looking at possibly shorting a symbol right now, shorting the symbol. And then as we get lower, I'm going to sell or write puts against that covered short. The short actually is my initial covering position. In other words, think of it as you're in the insurance business, and in order to sell these puts to get that put premium, to start your business, you need to invest in, and in this case, have a margin requirement for shorting it. And sometimes I like to see if there's a far out in time, deep in the money put option that I could use to substitute for shorting the stock, because I like doing the diagonal, including a little bit of leverage, but also getting away from shorting symbols. I didn't find one that I really like. So for this particular ETF, what I'm looking for is a good, test of that $12.75 that I've got on my chart right now. And when I got a good test of that and I'm heading back down, I've got maybe a lagging indicator in place hinting that I'm heading back down. I want to short some of these in lots of 100, because in order to do the option strategy, everything is in, contract is 100 option shares. So I want to do things in lots of 100. And then once I've got that shorted and I'm handing down, I'm looking somewhere below this $11.63, but I'm going to look for that bottom, maybe a test around that 10.50, and that's when I'm going to start the process of selling put premium and making money off of this thing. So I really like the idea. I did get a top signal, and I actually did short a little of this. I'm looking possibly to add to my position. Again, taking into consideration my risk tolerance on this particular position. But yeah, I'm looking to short some SILJ next time. I find out, add to my shorted position at this 1275, wherever I get that, confirmation that a top has been found. And then I'm in business. I'm going to be selling puts every time price dips down, maybe even buying some 3 to 6 month out protective calls up near my break even price at the same time I sell those puts, basically collaring the position. And that's kind of my strategy on this particular ETF.
Dan, did you like what AJ had set up there from another options perspective?
Yeah, I am a student of metals because they are, golly, man, they are tricky things. So I don't have an opinion necessarily on this one, but yeah, interesting. I like the way that you're looking at levels here. It's interesting how just gold has been just,
oh my God,
a rocket ship, and silver has not, which historically I think you wouldn't see as much, right? But I think a lot of that has to do with fundamentals, just because China and Russia they have been big physical gold buyers for months and months and months, and not buying silver. So I think you see that sort of fundamental disconnect that sometimes you don't see really. So yeah, that is interesting. Looking at, seeing some, the resistance here and such. I think especially if I'm a big 21-day moving average person for short-term trades. And I think if it busts below that 21-day moving average, it could be an interesting short-term, buy some in the money puts, high delta. Yeah, that could make sense for sure.
As AJ pulls up the 21-day to
you betcha.
Confirm it.
Yeah.
That's that, folks. That's that lagging indicator I was talking about. You want to make sure that you've got some sort of lagging indicator that tells you that, hey, we're done hugging this level of resistance and we're going to go down for a bit.
All right. Well, that's your pick of the week there, AJ. Silver Miners ETF Amplified Junior, ticker symbol SILJ. Shout out to Louise from the community for bringing that one up. As AJ mentioned, part of the becoming a member of the Trading Trader community are these Thursday mastermind sessions where the team and the members identify these wonderful opportunities. And like AJ said, at $12, this is great for one of those smaller portfolios. AJ, digging into this MACD here.
Yeah, well, what I did was, so the MACD, mathematically, it's just the difference between two moving averages. So I took the MACD indicator, if anybody's interested, and I kind of hacked it based on what Dan was saying. We always like to jump when we have guests and they throw out a little tidbit like, hey, I use a close below the 21-day simple moving average. So what I did here is I made the fast length 1, which is basically a close. The slow length is the 21. I changed it to a simple. So what I'm seeing here is every time the price closes down below the 21 simple moving average. So, I basically, so I don't have to stare at this chart where I've got all sorts of things on it. I can tell exactly when I get a close below the 21 now, right?
All right. Well, there's a little different,
little hacking of the indicators.
Little different approach to it. Cool. Silver Miners ETF. Let's dig into our speed round. These are some pretty interesting names that we might have some opportunities. Let's go ahead and start off on the Mountain West area. This is Diego in Colorado Springs, Colorado, interested in Las Vegas Sands LVS. AJ, I will say this before you dig into the analytics. I'm seeing a ton of videos on social media coming from Vegas with people posting at how empty it is, and I'm shocked at how many of these I'm seeing, and they're directly tying it to the economy. So take that for what it is, and let's see if it can have an impact on LVS here in your perspective. But it's
Well,
all
and I have to second that. I've seen it in the past. The first one of the first industries that tends to get, when people start saving money, one of the first industries that they do it in is recreation, gambling, things like that. So you see Las Vegas Sands, you see Caesars kind of taking a little dip. I'm not sure what you're thinking here, Diego. We just went through earnings. We just issued a dividend. One thing about Las Vegas Sands is I believe, if I remember correctly, they're not just in Vegas, right? They've got some stuff in Macau. They've got things in different states here in the U.S. that are opening up gambling. I know across the river here, I'm in Virginia, but across the river in Maryland, we've got a couple of casinos that have opened up now that Maryland has made that legal. So I think Las Vegas Sands is a little bit more diversified. But with that said, Diego, I think you missed the opportunity of seeing a bottom there. So I wouldn't be going long Las Vegas Sands or any sort of, option substitute right now. If anything, I would again wait for a top signal, and we've now got the 21-day that Dan looks at for short-term trades in two different ways. Look for that lagging indicator to confirm that a top has been found. But I bet, and you guys, you can get free access to the Trading Trainer options lookup tool. I'm going to pull it up right here. But one of the things you can do with this options lookup tool is, find a substitute option. Let's see if I can calculate this here. Here's Las Vegas Sands. And if we look at price components, this will tell us, the percentage of extrinsic versus intrinsic, which can give you an idea, how close this option is going to, act like the stock. And I'm going pretty far out in time, because if you're looking to actually create an initial covering position that you sell multiple months of premium against, here, let's look over here. I'm going pretty deep in the money. This number right here is what percentage of the price is actually in extrinsic value versus intrinsic value. So maybe you're looking at this $50 put expiring, this is the leap out in January. You could buy this and get pretty close to dollar for dollar movement with shorting the stock, only it's inverted. So yeah, maybe you do something like that. But again, I'm going to put the warning out there that I don't want to do this until I'm sure that a top has been found. What do you guys think?
I don't have any input on this one.
Dan?
Yeah, geez. I don't necessarily have a trade idea on here. I just have a couple of thoughts. I mean, it's got a PE ratio of 22, which is, it's not sky high. I mean, it's probably right about there. And this is, I guess, more from an investing value standpoint than trading standpoint. As far as their, I like what you said about when the economy is doing worse, casino stocks tend to do worse, which, we definitely have seen here since December, I guess, really. And interest rates too. When interest rates are high, casino stocks tends to put a little downward pressure on them as well. I mean, we already got that move busted out through the 21-day moving average. I mean, usually I describe that as a trading signal, because usually that'll last several days. And we've already exceeded that. Going through the 50-day moving average tends to give it a little bit of the 50-day moving average tends to act now as support since we're above that. It's interesting that on their last earnings announcement, they actually missed. They underperformed by like 1.4 cents a share, but they still raised their dividend, which is kind of weird.
They did, didn't they? They went from 20 cents to 25 cents.
Yeah. So that's kind of, I mean, they had a little bit of an increase in free cash flow recently, so I guess that's it. Like, I guess they just don't know what else to do with the cash, so give it to the owners. So I don't know. I mean, there's a bunch of thoughts. I like what you said. I would also not necessarily be a buyer here, but I'm not ready to jump in and start selling quite yet either.
Yeah, I want to see something happen first,
Yeah, for sure.
but I
All
want to be
right.
prepared in either
Well,
case.
Yeah.
well, look, so some names we're gonna like more than others, so we don't
Yeah.
need to dwell on the ones that. But
Diego, I would hold. I would hold until you see something materialize. It's too late to be a buyer, but it's too early to be a seller.
All right, moving on to our second name, Tanner in Fort Worth, Texas. I'm not really familiar with this brand, but Bloomin' Brands, ticker symbol
Oh,
BLMN.
Outback? You've never eaten at an Outback?
Okay, so it's a restaurant play,
Yeah.
casual dining.
Oh gosh, you guys are killing me today. We're past earnings. I mean, there was a little bit of a excitement and then a sell-off at earnings. This isn't the most exciting. I see an upcoming dividend. Again, I don't think I'd be doing anything today for you guys. I want to be prepared for possibly a test of this bottom over here. Again, I don't want to do anything today, but if we dip down here and then again, I'd want to see some sort of lagging indicator saying that I'm on my way back up. And I could see being in the market to maybe we do the cash secured put and start our wheel method on this. But again, nothing today. But I could see if I get a nice solid bottom reversal on Bloomin' Brands. I mean, they're a company that makes money. Some companies out there right now aren't making money every quarter. They're giving money back to their investors. I think investors might be okay for a couple of quarters here, not seeing any asset appreciation, letting us try to run through whatever's happening in the broader economy that's keeping people from visiting the Outback. So yeah, if I saw a bottom with a nice, a couple of whatever validating indicators you use, volume, crossing of simple moving averages, I could see putting a small portion, again, balance your risk. Don't trade anything more than you're willing to lose, into either buying shares in lots of 100 so that we could sell some calls against it, maybe doing the cash secured put deal here again after I get the bottom signal so that I can get the best price possible. There's a couple of opportunities, but again, just like we were telling Diego with Las Vegas Sands, I'm going to say wait. It's too late to sell and too early to buy for me.
Yeah, I'm with you on that as well, AJ. I mean, this one with lack of trading signals, I mean, we're kind of a little bit here at support. I mean, we were through this level of support in the beginning of April, but it's still a bit of a support level. But I mean, it's this one's PE ratio is like 4.5, just from a valuation standpoint. So that makes that sort of interesting. The 50-day moving average now acts as a resistance level, which is something that can keep it down. Just doing a little on the fly research here.
That's what we like.
Yeah. There are a couple metrics that I look at for trading, a couple that I look at for investing. From a value. Yeah. But I mean, just a couple of things that are glaringly interesting is they cut their dividend the last time, which they kind of had to. I mean, even at this level, their dividend yield is 8% after the cut.
Right?
So I mean, if you are a dividend investor, I mean, geez Louise, I mean,
this is a good one.
Yeah, I mean, yeah, it's a real good one, and especially and this is one of those things that I look at in cash secured puts. An 8% dividend, good. I mean, that's pretty solid. But if I buy the stock now for the dividend, the stock goes down. I mean, that's a little less than ideal. So if I can sell a put at a lower strike, maybe what are the strikes in dollar increments here, I imagine, right? So sell the, oh gosh, there's 7.5. Geez Louise.
No. That's the wrong stock.
BLMN.
Oh, never mind.
Yeah. So
every $2.50. That's like,
yeah, that's kind of,
that gets tricky.
Yeah, it's stinky, man. But I mean, I guess if you look at from where would I get assigned if I sold the put? If I sold like the June 20 puts, even on the bid at 80 cents, which you'd probably have to do, those are in the money. But if you get assigned on those, I mean, you're buying the stock at 6.70. Mm-hmm. And that changes the dividend yield. I mean, so what does that come out
right?
to?
Because where Dan went with that is, you get assigned at 7.50, but you made 80 cents on the premium. So in effect, when you do all the economics, you're paying 6.70 for this stock, right? 7.50 minus 80 cent premium. That's 6.70, and then you're getting 15-cent dividends. So this is more of on that investor play than possibly, something you want to trade.
Mm-hmm. Yeah, and that's been my big thing lately with the book and the podcast, which is based on the book, Wealth Building with Options. That's what I've been talking about mainly is investing as far as that goes. But
nice.
Don't get me wrong, like I still trade as well. But just looking at, I was just looking at this too. Like if you think about it, if you sell those 750 puts, you would get assigned at 670, which is, almost, I mean, it's a lot closer to just the low. Mm-hmm. And if you get assigned and buy the stock at that level, that brings the dividend yield up to 9%. I'm kind of
not bad for putting money aside, basically.
Yeah. And I mean, and it's not bad if you don't get assigned too. I mean, that's pretty sweet if you don't get assigned.
80 cents is a nice payout.
Yeah.
So AJ, is
lots
this
of options, Tanner.
You would hold on and then sell the covered calls every
yeah, if I got into the stock, then I would, there's if I couldn't break through the level at 9, if I kept getting my tops at 9, covered calls, the $10 covered call, something like that. That strike price increment kind of hampers us, right? That hampers us with the fact that it's every $2.50. So we have to choose between 5, 7.50, and 10. So that's kind of a bummer here. But the other thing is if this takes off again, something happens, people decide that, casual dining and going in and getting a bloomin' onion and all that good stuff. I think there's more to this brand than Outback, by the way. I don't remember off the top of my head, but if it goes higher, you could just sell off that asset once you have it. So right now it's about how can I get the best price for this asset. There's a lot of good fundamentally going on here for holding this, longer than shorter.
All right. Thank you for that, Tanner. Moving on to our third and final name. One of AJ's favorite retailers here, Kim from Toledo, Ohio, wants to know about Victoria's Secret, ticker symbol VSOP. CO.
You guys are killing me today with these symbols that I basically don't want you to do anything with. I basically don't want you to do anything with Victoria's Secret. It seems to be in a consolidation pattern around this $20. Um, I haven't had Victoria's Secret on my personal watch list for years now.
What about the catalog?
Well, do they still have the show where they have the people with the wings? That's always was fun when I was a little bit younger. Um, I mean, man, is this even perhaps are investors looking is this are people investors going to start to get antsy because they don't know what's happening, and then at the slightest amount of news, whether it's up or down, do you think maybe they're going to create a breakout? Maybe this is a setup for a breakout pattern. Again, I wouldn't do anything on Victoria's Secret right now. For a lot of these, whether it's Diego on Las Vegas Sands, Tanner on Bloomin' Brands, or Kim, I think there's other symbols out there that might be lower hanging fruit. What are your thoughts on Victoria's Secret, Dan?
Yeah, I'm just taking a look at a couple of things here. So, you sit there looking at, it's kind of an interesting one, actually.
I mean, why? How did they get $2.06? Is that around the holiday season? No, that was in.
Oh my gosh.
Their earnings last time was quite exciting, and then the earnings before that, they actually had a loss.
Yeah.
So I don't know what they're doing different.
That's
40 cents, 12 cents.
Yeah, boy, I don't know. Yeah, that's one I haven't been following either. A couple of glaring things here, and this is from a trading standpoint.
Okay.
Looking at this pretty good 1 year support level around like 15 and a half or so, busting up through the 50-day moving average, which went from resistance to support. But most importantly, I do a lot with short squeezes as well. And they have 18.34% of their float shorted. That makes them a pretty decent short squeeze candidate, especially because their PE ratio is under 10. So they make money from a PE ratio standpoint. They're underpriced. They're maybe overshorted. I would want to do a lot more research before really committing to this, but it's now on my watch list.
Well, there you go. Thank you, Kim.
Yeah. Thanks, Kim. Yeah, I mean, it could be an interesting one from a short squeeze type scenario, which I wonder if that's what this was back here in October of last year.
Yeah. Boom.
Yeah. I mean, that was quite a little mountain of climbing there for sure.
What do all you guys have against Victoria's Secret?
Tariffs.
Oh, yeah.
Yeah. Oh, well, yeah. Fair point. Right. Yeah.
Lace. I don't know where they're buying their lace. And that just shows how little I know about lingerie. Maybe there's more into it than lace.
I don't know.
I think that's it, man.
All right. Well, I think that's kind of our take on Victoria's Secret there. Dan did just send over the link to his Substack. So I went ahead and threw that into the chat. So if people head on over here to subscribe, they get like your little weekly, daily news blurbs, right?
Yep. Send out videos. I actually, when I make a trade in my IRA for my covered calls or cash secured puts, when I adjust them, I send that out
Nice.
once or twice a week. Yeah. So, if you want to get good with cash secured puts and covered calls, you'll see exactly how I do it.
Awesome. So the link to that is there. Dan, thank you once again for taking some time out to join us today. I
Always a
believe,
pleasure, man.
I believe
Same.
AJ's going to be making an appearance on your podcast at some point.
Oh,
So,
that'll be fantastic.
we're excited to have you back, maybe after the summer as we, head back into the fall and see if things have settled down. But truly appreciate your time. I know AJ is a big fan. Hopefully our viewers enjoyed it as well. Head on over there, sign up. He's got a great YouTube channel too. So we went ahead and threw that in the chat as well. Thank you, Dan. Enjoy the rest of your weekend. We truly do appreciate it.
All right,
Thanks, Dan,
thanks,
for
James.
making the time, buddy.
Yeah. We'll see you next time. Bye, guys.
All right, AJ.
I love having him on the show, man.
Yeah, it's great because you guys are so smart and good with the options that I like soak it all in. But I
Dude
still
can just rattle off numbers, can he? And he's just like, oh yeah, this is I love just watching his brain figure out how to trade the different things.
and then some of those fundamental perspectives. So
Yeah.
if you guys like that input, the links are in the chat. Head on over there. Let's go ahead.
I always think of that little demarcation between Southern California and Northern California. It's San Luis Obispo, Morro Bay, but Eric's completely right. If you look on the map, you don't really get to Northern California until you're, above Sausalito and stuff, right? So you're right, Eric.
Yeah, and I don't ever go north of the valley, so I'm definitely south.
Yeah,
Southern
you're definitely southern. I really I thought my time living outside of the outside of the Silicon Valley. I lived in Santa Cruz on the beach. My 3.5 years there, that was paradise for me. So I would love to get back there at some point.
Yeah, and today on my end, it's shaping up to be a beautiful day in the 90s. So
where you live is pretty fantastic. You're going to be in the 90s. I thought you were in like the 60s the other day.
Hey, we're having a little heat wave for like 2 or 3 days. The city is optimistic.
Short
But
weather.
with that, we ran a little over on the show today, but that's okay. Once again, the links to all of AJ's goodies is in the chat. So head on over there if you're interested in learning more. And then, heading into the weekend, heading into next week, AJ, what is your advice to all the viewers out there?
I mean, let's keep finding those premium trades. Dan and I both agreed wholeheartedly that right now premiums are at top dollar. So, if you were trading a few weeks ago directional strategies, the bear has, hit the bottom. And right now, until we get further notice, sideways chop, high premiums, this is perfect for selling that premium. So, change gears and think about that.
All right. AJ, thank you for your time. Thank you, everybody, for tuning in. Once again, head on over to the socials, hit that like, hit that follow, hit that subscribe button. If you have any questions, feel free to throw it in the comments, send us a DM, head on over to tradingtrainer.com to get all of those answered. Otherwise, everyone, thank you for tuning in. We'll catch you guys next week.
See you soon, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.